us was Bank of Canada Governor Tiff Macklem and Senior Deputy Governor Carolyn Rogers, taking questions from the news media and discussing, of course, the Bank of Canada's decision to leave rates unchanged, the overnight rate unchanged at 2.75%. During the course of the press conference, the two key words, and they really came from the statement. Here's the thrust of the announcement. The rate stays on hold at 2.75%. The bank has outlined two scenarios in its monetary policy report. The most severe scenario involves the second and third line that you see on this screen. A 2025 recession is possible, according to the Bank of Canada, under its more severe scenario. That's in which a serious and prolonged trade war occurs, and inflation of 3% or more is possible in 2026 in that more severe scenario. There was also a less severe scenario that included moderating growth and inflation hovering around 2% where it is now. That is a situation where tariffs come down but stabilize at a lower level. The bank also saying expectations for inflation have moved up. Those are both consumer and business expectations. Carefully and decisively were a couple of words we heard there. Tiff Macklem says the Governing Council of the Bank of Canada will proceed carefully and it is prepared to act decisively. Now, Macklem was asked at one point by the Globe and Mail, when you say decisively, does that mean a 50 basis point cut is possible? Is an intermeeting cut possible? Is it possible the bank would announce to Canadians on a day when it is not scheduled to make a rate announcement that it has made a cut to rates? Tiff Macklem's careful answer, as always, to that question was he would not, quote, over-rotate on the word decisively. So his message was don't read too much into the word decisively. The bank is watching inflation. It's watching the threats to growth from tariff policy and is willing to act decisively based on the incoming data. He was also asked, does the bank see the possibility of a severe recession? It certainly sees the possibility of a recession in 2025. Does it see that recession as possibly severe? Tiff Macklem said that, Carolyn Rogers took part of that question and said, be cautious about using the word projection. We are not projecting a recession. We are providing illustrative scenarios, one of which includes a recession. And a reporter from the Toronto Star asked, how close a call was this? And Carolyn Rogers says that after good deliberation among members of Governing Council, there was what she called a clear consensus on holding rates steady, or holding the overnight rate steady at 2.75%. There you see the reaction in the Canadian dollar, which has rallied by about a third of a US cent and now stands at about 72 cents exactly. So the Bank of Canada leaving rates unchanged and holding a press conference with members of the news media. Well, our next guest is watching closely how tariffs might affect Canada in the months ahead, as is the Bank of Canada. Randall Bartlett is Deputy Chief Economist at Desjardins, and he joins us now. Randall, thanks a lot for joining us. Do you agree with the bank's decision to stand pat as it waits for more information in this very volatile tariff and trade environment?
Yeah, the decision by the Bank of Canada today came in line with our call for the bank to wait on the sidelines and keep some powder dry to see how ongoing trade negotiations with the U.S. develops. We've seen that data at the end of 2024 and the first part of 2025 has come in as strong or stronger than the Bank of Canada had anticipated. So it really is a situation where that's that material uncertainty facing the Canadian economy and the Bank of Canada that it has to account for going forward. So we think it's the right call to make at this time.
The bank was asked, or Tiff Macklem was asked, would the bank contemplate a 50 basis point rate cut depending on the facts on the ground, those being the tariff actions of the White House. Do you see that as possible?
Yeah, we certainly see it as possible if we end up in that scenario 2, severe downturn scenario. It's a possibility that's on the table. We don't expect any sort of intermeeting cut by the Bank of Canada, but it certainly is something that could be on the table as early as June if we see that we end up in a severe trade war scenario, as the Bank of Canada illustrated today.
The most recent inflation data, of course, came yesterday, only yesterday. It was significantly softer than economists had expected and showed a significant retreat from February's level of at least headline inflation. Core inflation was a bit of a different story. Does that make it easier for the Bank of Canada to cut rates now, softer than expected headline inflation?
Yeah, I mean, I think it provided a little bit of breathing room for the Bank of Canada relative to what markets have been anticipating. But the reality was, as you unpack it, as you said, the underlying inflation did show signs of the headline coming in a bit softer. But we're still seeing that categories growing at over 3% year over year. It continues to increase as a share of inflation categories, and so it was sort of a mixed message under the hood of the inflation print yesterday, especially when we start looking at underlying inflation and take out things like the volatility of food and energy prices.
Of course, one question that was not asked is what kind of retaliatory tariffs should Canada enact, because that's not the job of the Bank of Canada, that's the job of the Government of Canada. You and a colleague very recently, or earlier this month, not immediately recently, but April the 4th to be specific, took a look at a retaliatory tariff strategy in Canada. You presented some detailed thoughts on that. Now, most recently, just yesterday, we have the Government of Canada announcing it was tweaking, perhaps dialing back some tariffs, particularly on the auto sector. Do you see that as a refinement of our retaliatory tariff policy or a significant retreat?
No, I see it very much as a refinement of our retaliatory tariff strategy. When we look at the first round of tariffs, they're very much applied to those sectors of the U.S. that export significantly to Canada, where Canada is their biggest customer. Look at the second round, very much focused on reciprocity, hitting steel and aluminum imports from the U.S., as well as those categories where Canadians are actually able to substitute away from more readily. And then on the auto side, it really was focusing on, again, reciprocity, hitting the U.S. Auto sector to the same extent that they're hitting ours. And so as the U.S. adjusts and refines those tariffs, I think we will do the same. But ultimately, Canada is really just hitting back at the U.S. In a measured approach and in a way which is not trying to escalate the trade war, but also not necessarily backing down from the U.S. as well.
How pronounced is the inflation risk from tariffs imposed by Canada on goods coming into Canada from the United States? On April the 4th, you said your numbers showed that about 50% of U.S. imports into Canada were tagged with tariffs. That makes those products more expensive for Canadians. How pronounced is the inflation risk?
Yeah, so what we're seeing now is that, we had assumed in our forecast that we would see.
You're good. We can hear you loud and clear. Go ahead. Okay, we've lost our connection.